all that, or do I have?
Yeah, we're all good. I think we're all good here. Yep.
Well, let's say wild markets. I mean, today, just look at what happened in Bed Bath and Beyond, up 75% at one point. You know, it's just getting crazy, which is good, which creates volatility. I think it's going to create a lot more opportunities as especially after we get past Labor Day. It's something where you know, you know, nothing moves in a straight line. So we're going to have a lot of interesting things. Whether you're a bull or a bear, the most important thing to know right now is that no matter what you are, if you want to be now, if you're a long-term trader, that's great, and I think everybody should have a bucket in their markets. I'm sorry, in their investment strategy that it's in the 3, 5, 10, 30-year horizons. But for those who have the inclination and the time and desire to be a more active trader, this is the best time to do it because we have the tools to do it. And I'll just say my experience, and we'll go over that in a minute. But my experience is vast. I've been, as Rodrigo said, I've been here 40 years in the business. It'll be 40 years just after Thanksgiving, and I started the Monday after Thanksgiving way back when. And but the thing is, now we have a million different things that we can use. In the old days, you just had quarterly options if you wanted to be a quick trader. Now you have weekly options on all of the major stocks and many of the intermediate sized stocks. And you have you have 3 times a week options on all the the 3 major indices: the Russell 2000, the S&P, and the NASDAQ. They also have it on the Dow. The Dow, I don't really trade those that much very often, but the points, and the same thing we have for ETFs, and we have inverse ETFs, and we have leveraged ETFs, and now we're coming out with these single stock ETFs. We haven't really got involved with those yet, but we will as they become more liquid. Because I mean, if you really have a great opinion on Apple Computer, I mean, let's face it, Apple goes down sometimes too, but you think it's going up, whatever, there's going to be an opportunity in the not too distant future where you can buy a 3 times levered Apple ETF. No, it won't give you the same thing as a stock, as with stock, because you don't get ownership, but it does give you that leverage for very short-term trades, over several days, maybe a week or two. But these are the types of things that we have. So no matter where you stand on the spectrum, I'm still bearish, and I'll tell you why. I just think this market's getting ahead of itself on this rally. But money can still be made on both sides. We're still making money on both sides, and that's the key, because no market moves in a straight line, no matter whether it be the stock market, the bond market, real estate, you name it. And that's one of the great things too here in our chat room. We talk about many different markets. We've made money in many different markets because, again, we have the tools. You can use ETFs to do it in the overseas markets. You can do it in the bond market. You can do it in the high yield market, et cetera, et cetera.
Right. No, and that's the thing. You've had some pretty crazy winners here. For those that don't know, Matt Maley has the record of the biggest percentage gain in Benzinga Trade Alert history. And before that, he had the record, right? And Eric Beck on the YouTube asking if this is live. Yes, this is live. We are here with Matt. So we're doing this right now. But yeah, Matt, you've had some pretty good winners. And here's the thing. You've also, some of those trades, one of them was like short. Well, I think it was shorting I think it was calls on the FXI, but then that which is something in China ETF.
Yeah, it's a large chat. Yeah. So I mean, it's
and
not
the other one was that meme stock that
Viacom, which is now Paramount, But that's why
it's
people forget
variety.
Viacom. It's no longer called that anymore. But it was Viacom, and this summer, very beginning of summer, maybe it was during the spring, they changed their name to Paramount, trading under a different symbol because they split up, etc. But it was a stock that, much like Bed Bath and Beyond today, rallied ridiculous amounts, and its RSI, relative strength index, got so ridiculously overbought. We went and bought puts in the stock, and the thing rolled over. We made 2,500% on our first half of the trade, and the other half we sold for 5,000%. Some people held on for even longer and made as much as over 10,000%.
Yeah, so let's just maybe share your charts, Matt, and walk us through this trade. I'm familiar with this trade. I got some emails about it. So every time you put a knocker trade like that out, it's sure. I hear about it here.
Make sure, can you see it or see my screen okay? It's obviously a different screen that we want to see. You see it okay? The screen, yes. It's not what we want to see. Hold on. Let me just pull this down just a second. There we go. Okay, sorry about that. And don't worry, I'll blow it up so you can see it much better than you can see it right now, but hold on. Okay, we'll go into this. Bang. It just needs a second just to kind of get in here. There we go. Okay. Okay, well, that was actually the Chinese trade. Hold on. Okay. My apologies here, but here we are. Boom. There we go. Now, don't worry, I'll blow it up so you can see it better. Okay, now, this is what we had in Viacom. Remember Viacom CBS, which, again, they're Paramount and they've all split up into two different companies. But anyway, what we saw, was part of the meme stock play because it had a huge short. This is, in March of 2021. And you see how much this stock just got ridiculously overbought. But this is what's called the RSI, Relative Strength Index. It's something that we measure. It's a good measure to tell you if a stock's overbought now or oversold. When it gets above the red line here, those people, they've heard me say this many times, but the red line, it's red because it says stop. It's getting overbought. Stop buying. Don't buy it here. And when it gets, and that's up at the 70 level. That's 70 on their measurement, not on price. And then when it gets below 30, that's the green light. Go ahead and buy it. And many stocks, you want to wait till it gets, above that line. It just depends on the stock. But you can see how many times if it got overbought, the stock sold off. It got overbought, sold off. Got overbought, sold off. See how it got overbought, sold off. Look how ridiculously it got overbought here. This reading was not just slightly above 70, it got to 95. So I came in and said, this is ridiculous. We got to sell the stock. I'm sorry. If you own the stock, sell it. If you want to, and you should, go ahead and look at buying some the options, the put options. And of course, as you can see, the next day the stock fell 60% and kept on falling. And as I've said at the time, it's like, there's a lot of, there's some AMC and GameStop. There's a lot of reasons why I say Viacom, man, they're not changing the world. I mean, they just make movies and TV shows. And so it was a no-brainer. But again, we made 5,000% on our money on that trade. And I just want to show you another one here. Oops, let me just go back a second real quick so I can get to it quicker. I think it's in 63. Now this is when we broke that record was this year. And see FXI, there we go. Okay, great. And again, let me blow it up so you can see it better. But this was the FX. Again, we're looking, so that last one was a U.S. stock, well-known U.S. stock of Viacom CBS, which is, again, it's now changed, but so we're constantly on the stock market, and that's where we do most of our trades. But we do them anywhere where you get the opportunities. This one was the FXI China Large Cap ETF. And remember 2021, the market just got getting clobbered. And I hated the market. Every month the China was coming in and slamming down, putting the brakes on every, first, it was Alibaba and Jack Ma, but he went industry to industry. He started in technology. He did gaming. He did the educational business, et cetera. And the market just got killed. But then early in 2000, or this year, then we came out in the S&P, this says last weekend's chart, but this was a chart that I made in March, so it's obviously not last weekend. It was last weekend in March. So finally, though, the SEC came in and said they're thinking about delisting a bunch of these Chinese names, and the market just fell out of bed. And again, look at this RSI. Below 30 is oversold. Here, just below 30, just below 30. Each time it followed by a short-term bounce. This got so ridiculously oversold. I said, okay, we got to buy the calls. And sure enough, it bounced the next day, 27%. This is the whole index. Okay, it's like the S&P bouncing 27% in one day. And needless to say, this is what we did. We went in, we bought and when we do in the chat room, a lot of guys are bantering ideas back and forth every day. One of the great things about our chat room, because it's not just me giving the ideas. A lot of people giving different ideas. But when I give it out, I give it very specific. I tell you what the stock is, or in this case, ETF, the strike price, March 18th. Strike, the expiration date, okay, which is March 18th, the strike price, and which is $30, and whether it's a put or a call. So we came in, we bought them on the 15th. Okay, the strike price, I'm sorry, the expiration date was that Friday, but we bought them on the 15th, and look what happened. The next morning, they were up. I knew I was going to. Not only did I know this thing was ridiculously oversold, but I knew that the government was no way they were going to let their stock market fall out of bed. This is China. I mean, there's a communist country. I'd seen it done on the before. It was just my experience. I knew they would be in there buying the stocks hand over fist, whatever it took. So I didn't sell them right in the open. Believe me, these things opened up over 1,000%. Usually I'd say 1,000%. Let's not get greedy. Take your profits and run for the hills. It's just, when you make 10 times, 11 times your money, that is, you just run for the hills. But I knew they'd keep buying. So sure enough, when it got to about 3,000 times, 3,000%, 3,000% return, the 3,000%, I said, okay, we got to take some profit. So we sold half of them there. But we held on to the end of the day for the other half, finally up almost 8,000%. 80 times your money, obviously, or 90 times your money. We just said, okay, this is just this is too good to be true, and I sold the balance. That's what I did with my shares. Other people actually even held on for longer. One person said they made as many as 14,000%. Several others have made over 10,000%. So again, I come in and I give you an exact, where my entry point was, which was right here at the end of the day. Okay, and I gave you the exact, like I said, the exact play. And then, it sold half here, exact time, and then came. And what we do in the chat room, we have this scrolling chat room, and it's people are making comments left and right. But I also have a separate page where I put in my trades. I also put every once in a while, I'll put in an important comment here or there that I think is important. That even though it's not a specific trade, but I'll say, hey, this level in crude oil is vitally important. Keep an eye on it, and I'll just put that in bold so that people can see it. Because if you're off, you're doing a million things during the day, and some people do this full time. Some people just go back and forth to it on their jobs. You want to be able to go back and say, well, Matt did a trade. Oh, I've been off the site for 2 hours, came back in. Matt did a trade an hour ago. Oh, okay. Hey, Matt, and go right to the thing. Hey, Matt, you did this trade an hour ago. Is it still good? Things like that. So you can look right away and not have to scroll up and down and see something that, you go through dozens and dozens of postings to see, the picks I may have made. But anyway, these are the types of things that we're constantly trying to do in this. So let me just talk a little bit though before we move on. Why would you listen to me? And I just say that again, 40 years on Wall Street doesn't mean anything. Well, I guess it means a little bit of something. I've been able to keep a job that long, but for the main thing, again, many of you may have seen me on CNBC or Bloomberg TV. I haven't been on this week yet, but I'm on most weeks on one or the other or both. In many cases, I was on both last week. Bloomberg Radio also, Yahoo Finance, and TD Ameritrade. Even though they got taken over by Schwab, they still call themselves TD Ameritrade Network. Great site. So these things that I'm on quite frequently. But the thing is that I'm a strategist at Miller Tabak, but I am a lot different than most strategists because I was a trader for 25 years, and I covered the trading desk of all of the best institutions, the biggest institutions in the business, the biggest mutual funds, the biggest mutual funds, including the biggest mutual fund, the biggest hedge funds, including the biggest hedge fund. Those are Fidelity on the mutual fund, BlackRock on the hedge fund side, insurance companies, banks, etc., the institutional desks. And in those things, when you're trading, fundamentals are always very, very important. And that's what most of these strategists are. They're former stock analysts or former economists. I was a former trader, 25 years, and you learn about what will happen, not what theoretically should happen. We do look at what theoretically should happen, and to be honest with you, it's cost us a little bit in recent weeks because I've been bearish, but we've been able to make some money back very, very nicely on the upside. And that's what you want to be able to do, no matter what your stance is, and that's what we concentrate on here. But the point is, I look at a lot of different things than people do. Again, when you have a situation where when you don't care where the stock is going over the next 3 years. You care about where it's going over the next 2 weeks or the next 2 days. Because, as a trader over these years, you had a position, or your customer was buying the stock. You had a customer at a position. You're trying to help them buy it the best way. You're trying to help them make the most money. But for yourself, a lot of times they come in and get you to take a position on in the stock, and you had to be able to trade around that position, no matter what the long-term fundamentals were, because so many other things go into short-term trades. You can have really, the fundamental output can sometimes be thrown right out the window when you have sentiment that gets really extreme, or you get positioning that becomes really extreme, or you get these weird correlations that most people don't understand or don't even realize. And these are the types of things that allow me to go in and see things like this FXI trade, and then saw the Viacom trade, and see. And I'll tell you, I can go over a gazillion more of these trades. Hold on here. I don't want to bore the heck out of you guys, but whoops. Okay, let me go back to thing here. I'll give you a few more examples, but the point, as you can see, is that up-to-date examples. We've had, whoopsie. Okay. Let me just make sure. Great. Bang. Okay, what is this one? XLY. Nope, that's not what I'm looking for. Hold on. There we go. There we go. Okay. 10-year Treasury. Okay, these are a couple of things. Okay, good. And here are just some examples. Again, I'll blow it up so you can see it better. We came in on Labu, which is what the heck is Labu? Well, it's the internet. It's the biotech ETF, but this is the 3-time leveraged ETF. Okay, the IBB is the one I look at. There are other biotech ETFs, but I saw how the IBB was breaking out to the upside. But I said, let's go after the big one. Let's go after the Labu, LABU, because that is the 3-time leveraged ETF for that for the biotech sector. So we went in again, gave the exact stock. Okay, the expiration date, strike price, whether it's put or a call, and look at that. We bought it late in the day. Again, didn't get the exact bottom, but we were able to sell them later the next day, up 800%, up over 800%. I didn't get the high. If you're worried about getting the exact high or you're up 800% and you're ticked off, you didn't make 850%, you wish you'd made 925%, you're going to go crazy. You'll drive yourself crazy. Pat yourself on the back, even if it ends up going even and making 2,000%. If you start worrying about losing that, you'll just drive yourself absolutely nuts. But these, again, this is outside of the realm of what most people are looking at. I was going to go back to that. TQQQ calls. Remember recently, we were very bearish, and I was bearish. Had a lot of puts on the marketplace. Had some what's TQQQ? I'm sorry. That is the 3-time levered ETF for the QQQ, the NASDAQ 100, all those high-tech names. But we came in here, and we bought the TQQQ July of $26 calls. And again, and this was just a midday trade. Okay, we bought them made 133% before the end of the day. Again, didn't get all of them, but you can't, you can't worry about every single move. Now, here's one, because I just like to show that we do it in different markets. The TLT, that's the Treasury ETF. It's like, how? Wait a minute. You can't make a lot of money in treasury markets. That's just a safe trade. Well, not so fast. We know what's going on with the Fed. They're doing all sorts of things. Right now, they're trying to convince us, and I believe they're going to continue to tighten, but nobody seems to believe them. But my point is that here we came with a situation where the TLT can become oversold. That means yields have gotten ahead of themselves. We came in, bought them, and bought the TLT July 15, $115 calls, and again, almost 300% in a matter of 3 days. Okay, again, didn't quite get the high, didn't get the exact bottom, but at 283%, that's pretty darn good. Whoops, keep going back one way. I'm going to go. Okay, again, now even what we saw in wheat, it's like this is the ETF for the commodity wheat. Same thing. It took us 3 days, but we made 254% on some $9 calls there when they got ridiculously oversold. Remember how big the sell-off has been in commodities. People forget or don't even notice because oil is still down near its lows. Everybody thinks all commodities are down near their lows. They're not. A lot of them have bounced in a big way. This is one where we took the advantage of it. Now, I just want to go back because I'm talking about a lot of different things. Here's one with the XLE. This is back a couple of months. We've actually made some really nice plays on the XLE lately, where we made over just this week, last week, made 200% on the XLE. That's the XLE. That's the energy stock ETF. Even though it's bearish bearish on the market, I'm bullish longer term on the oil stocks. So we bought those. Here's the situation. This was back in June where we made 400% on half of our trade and 500% on another one. But just this past week, we made 200% on the trade. I held on to some of it. And then early this week, after I heard the news coming out of China and how they're really slowing down, I said, that's not going to be good. I still like them longer term. I still like them intermediate term. But I said, okay, I still own 10% of my position. I'm getting out of theirs with just a small gain, but I didn't want to piss away the gains I had on 90% of my position by letting my one go to zero. So we went ahead and sold it. That one ended up being a small gain, but the combined position ended up being a very big one and one that worked out very, very well. But I want to go over to this one where oops. I have it here. Here we go. Apple Computer. This happened back in May, but I just want to give you an idea that how I try to think outside the box. Back in May, the cryptocurrencies were getting absolutely crushed, as we all know. And the problem is they were getting some margin calls, some major margin calls. And these cryptocurrencies, even something like Bitcoin, just wasn't liquid enough for people to sell enough of the Bitcoin to meet their margin calls. So they had to go to look for something else. I remember this so well from my experience, where a couple of times where I've seen very illiquid things become come for sale, and people are like, this is what happened. Those who've been around a long time know that what happened in the late 1990s, 1997, I think it was in 98, when long-term capital management, they had these huge positions, these esoteric bonds. And when they turned on them, they were highly leveraged. They got margin calls. There was no way they could sell enough of these bonds to meet their margin calls. So they went to what they could sell, which was General Electric. At that time was one of the biggest, probably the biggest, most important company in the world, and certainly the most liquid stock. And they just dumped that stock because that's the only thing they could sell. So I remembered that, and I said, what are these people selling? And I looked at Apple Computer, and it was like the stock went down 10% in just a couple of days. And I'm like, wait a minute. There's no news out in Apple. Sure, Apple can go down 2 or 3% for no reason, because that's just because it can be a volatile stock. But for no reason, I mean, 10%. I said, I know what that says. That's all those people. Those people own the cryptocurrencies. They don't own General Electric. They don't own General Motors. They own Apple, and they're using Apple to meet their margin calls. So we came in then on the 12th of May when I saw that the cryptocurrencies had stabilized. I realized the forced selling was over, and yet Apple was down again. So we came in and we bought the options again. April, it was on the 12th. It was right before Friday the 13th. And here was the one where I got out after a 400% rally. And the reason why I didn't hold on for longer, you see, geez, you held on for a while, but I said, it's the last day of the week. Anything can happen over the weekend. Now, it did actually come back down a little bit. But again, I don't lose any, I didn't get the exact bottom. I could have gotten a little bit more out of it. With 400%, I'll take that every day. But again, these are the types of things that in my experience has been able to bring to the people in the chat room and the profits they've been able to make. And like I said, I always give you the exact trade, the exact entry time, and the exact and when I take the profit or the losses as it may be. So it gives you an idea of what we try to do. We make these calls on a I don't like to use the term call. We make these plays, because when I say calls, because we're making puts and calls. But I also do individual trades on individual common stocks, especially if the stock involved has very poor liquidity in terms of their options. And I just want to pull up my Bloomberg screen here. And let's go up. Whoops. Okay. Let's see if this can't go up. Okay, this. There we go. Okay. Whoopsie. There's my little alert screens. See where oil is. Okay. Now, but again, that just gives you an idea where I just try to look at we focus mostly on stocks, but there are so many other opportunities out there from time to time. When you can see it again in the currency market, you can see it in the commodities market, you can see it in the overseas markets, and you can see it individual stocks, ETFs, leverage ETFs, etc. It really makes for a good opportunities. Now, right. The one thing we may have coming up here, the rest of this week, I think we still have plenty of opportunities. We have the Fed minutes tomorrow. We got the retail sales numbers tomorrow. We have some more retailers reporting tomorrow. Things could really pick up. could continue to be volatile. Next week, it'll be interesting to see. Next week could be a boring one, but we're not going to force it. If it's Monday, Tuesday, Wednesday, if things are really boring, things could get a little bit more exciting later in the week, because that's when we have the Fed. It's a Fed meeting. It's not really a Fed meeting. It's a, they call it confab, whatever, a gathering sponsored by the Kansas City Fed that they have every year in Jackson Hole. I'm sure you hear a lot about the Jackson Hole meeting, and that will be an opportunity to Fed if Powell really wants to hammer the point along home that they're definitely going to be tightened more. This is going to be the time to do it, and it's also going to be, a lot of people are going to be focused on what he says about the shrinking of their balance sheet, which they have basically not done at all. I mean,
Right.
They have very, very small amount, but actually last week their balance sheet grew. So what's going to happen when they actually do start to shrink that balance sheet? I think it's going to create some problems for the market, and we're heading into that September-October timeframe. That is usually bad for the markets. Not always. 2017 and 2019 it was okay. 2019 was artificially driven because the Fed had a QE program behind the scenes, but and I can touch upon that a little bit later. But the point is, we now have a stock market that's trading at 19 times earnings, and that's very expensive when you have a Fed that's still tightening, a Fed that's just about to start shrinking their balance sheet, and an economy and earnings that have definitely stagnated, if not slowed down in recent months.
And really quick here, Matt. Well, a great presentation. And it's on the YouTube chat, giving some love there for the presentation. And sorry, we'll be going over questions and tickers at the end. But I'm getting a lot of emails here, Matt, about the live trading room. Sunjad is asking, how can I get in the group? So Sunjad, I went ahead and posted the link there on the Zoom chat so that you can use that. Everybody can use that, but I'm going to go ahead and just answer some of these questions that you guys have emailed. I basically grouped up the main questions here. So let's see. Are the sessions? By the way, Matt has a session on Tuesdays with chat members, and so that's going to be recorded and that's going to be uploaded in as well, so that you guys have access to that. Next one: does everybody that joined get a free laptop? No, only the first 10 people to join will be getting a free laptop. So that's just regularly part of it. So the first 10 people will get the laptop for free. Let's see, next question from Phil. What is the chat room schedule? That's Monday to Friday, 9 to 5. And that's live trading with Matt Maley throughout the day, Fed events, earnings, even meme stock mania, whatever's happening, there's always going to be, Matt's always going to be there helping you trade the stuff. So good question there. Let's see, Joanne, next question, money back guarantee. Yes, 7-day money back guarantee. And then we got Jim, price at renewal is going to be the same as today. It's 70% off. And that pretty much covers the majority set of questions I got, Matt. But maybe you can provide a little bit more context into what you do on the Tuesday sessions, because I do know also that, look, you provide killer trades, but you also provide a great amount of education to all the retail traders that don't even know what the Fed is, or how these rates impact. And it's very important, right? It's very easy to overlook and just buy whatever's going up today, but you really train people like if you'd be training them, to pretty much become the best traders they can be, right?
No question, Rodrigo. And the thing we try to do is and I do it during the chat room every day. Now, one of the key rules and is that there's no such thing as a stupid question. And you could have the highest IQ in the history of the world, but if you've never been told something, how could you know it? You can't. There's a lot of things in the stock market you can't just deduce. It doesn't make much sense at all. And I give you many examples. One of them is that everybody says, "Oh, when oil prices go up, it's obviously negative for airline stocks." Well, sometimes it is, like it certainly was this year, but not always, because sometimes it's when oil prices are going up because of demand issues, not supply issues. It means that the economy is booming, more people are traveling, more people are going on business travel. So therefore, the airlines actually are doing better, even if their margins stay high because they can raise prices because everything's doing well. This year they haven't been able to do it because haven't been able to, well, they did raise prices for a while, but the whole thing is there's certain things that they're completely counterintuitive, and until you actually learn them, it's hard to know. So we really try to focus on some educational things, but especially on that Zoom call we do again at 11:30 on Tuesdays, Tuesday morning Eastern time, and usually about an hour long. And we start off, we're gonna say, I would do 20 minutes and just kind of go, but it's gotten some great feedback. And I start off by talking on a number of different things. I mean, just today we talked about Home Depot and Lowe's, and how they're getting overbought near term. So be careful about chasing them. Lennar, another home builder, they had these Home Depot did very well today, but the home starts was very weak today. So when you get weak data, and we also had the National Association of Home Builders gave some data on Monday. That was weaker than expected. We're getting some conflicting things here. And so if the group rolls back over, I just don't want to be chasing Home Depot right now. And Lennar is a builder. We talked about gold, and I will talk about that before. Apple Computer, how important that is. LNG, and then when we came in, and people were asking me questions about individual stocks that they were very interested in. And sometimes people ask me about this stock because they think they can buy a put or a call and make a lot of money over 2 or 3 days, or even just a couple hours. But other people talk about, geez, I've owned this stock for a long time. I've got a great profit in it. What should I, what do you think here? And again, we go into those things. So it's a great hour-long thing, just like this, where I'm talking, and I pull up my Bloomberg just like I have now. Those other things I show you were charts from the past. Now I've got my live. It's live. The market's closed, so it's not changing. But you can see this is up to date to the very day today. And let's see here. You can see right here. This is the date today. So, but let me get rid of that. Okay. So. So again, this is what we try to do. And one of the things that I would say, just a talking point right now, one of the things I'm concerned about with the stock market right here, forget about anything else. I'm just on a very short-term basis. No market moves up in a straight line. We know that. And even this one started to rally, came back, looked like it was going to fail. But then from, middle of June, sorry, let me just move this up a little bit. Hopefully you can see it a little bit better. From the middle of June, I'm sorry, take that back. From the middle of July, it's been pretty much straight up. 2 days down there, 2 out of 3 days down there, but almost exactly straight up. And no market, that's not healthy for any market. It can't go up forever, even if it's going to 10,000 by Halloween. Okay, it needs to see a pullback. And one of the reasons why I'm seeing it here is this purple line right here that we got right up to today, and then pulled back a little bit from, is the 200-day moving average. That's a line that everybody looks at very closely. There are other ones that you can, and the 100-day moving average was the one we were watching for a while. And that, I'll pull that back up. And that's one we will be watching if the market does roll back over. But see, see how the green line, I'm gonna get rid of the 200-day. Let's see how this, again, we go through this educational stuff. See how it was key support here. This is the green line, the 100-day moving average. Key support it held, key support it held. It held earlier in the year too. Here it is. See how it was supported, got close to it, there. When it finally broke above it, broke below it, I'm sorry, as is normal in these type of situations, old support becomes new resistance. And it became the resistance. It got it slightly above it, fell. This time it finally broke above it and off it went. And that was bullish. Okay, now we're up to its next key moving average, the 200-day moving average. What's it going to do next? A lot of people, think, geez, it's been going up every day. Well, it'll continue to go up every day. I'm not so sure of that, because look at this RSI chart. Remember we talked about that earlier? Relative strength index. It's getting overbought. It's not crazy overbought, but it's getting quite overbought. And whenever you get a situation where a stock gets overbought and is reaching a key resistance level, it it usually means it has to pull back, even if it just takes a sideways breather. It needs to digest those gains before it moves higher. So I'm thinking that this thing will probably pull back. And that's not the worst thing in the world. That doesn't mean the market's come crashing down to between now and Labor Day, 2 weeks from now. But it could come down. It could even be a little bit of a scary pullback, but we'll see. But my point is that on a short-term basis, we need to see a break of that 200 now that it's rallied so strongly before we really get excited about a further rally in the market. Now, the things that again, more stuff too that I want to talk about. Again, we want to make this as educational as possible. I'm going to pull up
really quick here, Matt. Just want to give a shout out here to Terrence. Welcome to the family here, newest member for the Stock Picks Inner Circle chat room.
Terrence, thanks for joining us. I have a cousin named Terrence. Actually, I have 42 cousins. Can you believe that? Two of my mother's sisters had, one had 10 kids, one had 11 back in the day. But anyway, so so this is what we're trying to look at. And what are we looking at right now? What happens, again, there's a lot of reasons why I think that this market has gotten too far ahead of itself. And, but at the same time, you can't always, if they can't fight the tape endlessly, you got to go with the flow. I mean, a trend is a trend for a reason. It's, the trend is your friend. That's, that's good. But a lot of money can be made when you get those key turning points. And what I'm going to be looking for right now is look at the, for instance, the chip stocks, the semiconductor stocks. Okay, let me just, oops, hold on. Oops, SMH. Okay, SMH is the semiconductor ETF. Okay, I'm gonna bring up a different chart here. I told you the relative strength index chart. This is the MACD chart. Okay, and what does MACD stand for? It stands for, I always forget. I should know this by now. All these years. Moving average convergence divergence. And this thing, but the way it is what it does is the 9-day moving average versus the 12-day moving average. And it works very much like, I'm sure a lot of you heard about a death cross or a golden cross. And those take place, if you're not familiar with them, but two very common ones that people look at are the 50-day moving average and the 200-day moving average. Whenever a rising 50-day moving average crosses above a rising 200-day moving average, that is bullish. Okay, they call it a golden cross. And the flip side is a death cross, and that's when the 50 crosses below a 200-day moving average. Well, this is a shorter term play, and they take the 9-day versus the 12-day. Okay, but look what happened. What's happened here. See what we're looking at. The chip stocks are probably the most important, if not one, certainly one of the, if not the most important leading indicator or indicators for the stock market. This group never lags the market. Okay, it doesn't always lead it. Sometimes it's a coincident indicator. In other words, it goes up at the same time and pace that the broad market does, that the S&P does, and sometimes it goes down at that same pace. Sometimes, though, it does lead it. In 2018, the chip stocks, the semiconductors, rolled over in the spring and just got clobbered over the summer, and the rest of the market held up, and it was just a matter of time before so it was a great leading indicator. But look at it right now. Okay, it's bumping up against its September highs. And the reason why that's important is most other indexes have moved above their June highs. This one hasn't. It hasn't been able to do it. If it fails, like I said, it's not going to play catch up. It never is a lagging indicator. If it fails, it's going to be a problem. Now, remember, go back to this MACD chart. Look what happened when we got a negative MACD cross, when the white line, the 9-day, moved below the red line, the 12-day. Look how that thing just fell out of bed. We had a negative cross here. Look how it fell out of bed. Here we got a couple of false readings, then finally it fell, and that's when it fell. Look what the negative cross here. Boom. Time and time again, it has been followed by a big sell-off. Now it curled over here and looked like it was going to be really negative. Didn't quite, kind of did what it did here. But if this thing breaks down, it's going to be a big negative thing for the SMH. We're going to look to buy puts on the SMH. We're going to buy puts on stocks like advanced micro devices, like NVIDIA, Intel, other names, and especially because that negative cross would come after a failure to break out of a key resistance level. So these, again, are the type of educational things that we try to talk
Real
about.
Education, like actionable stuff that not la world stuff. Tiffany has a great question here. Any modules for testing knowledge? So this is basically structured as a live trading room. It just so happens that Matt's 40 years of experience really provide a great backdrop to what's happening, not just on the technical level, on the fundamental level, the economical level. because somebody that's been looking at these numbers, like if you're just starting, you might not even know what a CPI is, or the economic numbers that are reported, but somebody that's been following them for 40 years really knows how these things work in and out. And there's just some things that you really can only get by experience doing. But Matt does provide a lot of different types of education. Matt, maybe you can elaborate a little bit more on that.
Yeah, I mean, besides this, webinars like this, and of course, the in the chat room, we do that Tuesday Zoom call for an hour. But we're talking about this stuff all the time. I mean, and I send out this note on the morning sometimes, the kind of that I send to my institutional customers, and you can kind of get an idea of what we're talking about. This is kind of the more technical analysis stuff. But you look at, I mean, one of the things, and I have you can see I have Bloomberg there right here. Excuse me. I'm just going to grab it. It's funny because I have Bloomberg so long, and I used to have this thing, but long before I had my computer all set up and I was using Bloomberg, I wrote down all these little funny tickers that nobody ever looks at. I wrote down. There's a piece of cardboard I've had for like 15, 20 years, and I just kind of look at it every once in a while. But here's a situation I want to talk to you about crude oil, and there's a lot of reasons why I think.
Will the chat members get access to the 15-year-old tickers in the folder?
Well, believe me, when we talk about them, if you've got Bloomberg, if you want to pay $3,000 a month for Bloomberg, that's great. But there are other ways to look at these things outside of Bloomberg. But and I will definitely I mean, I don't hide anything from anybody. I tell you what I'm looking at. But here's an interesting situation.
That's the holy grail of Matt Maley's trades. That folder.
Let me just put here. Okay, Okay, this is the symbol for. Oops, CNCN. This is, again, so many of these ones I know just off the top of my head, but I don't look at this every single day. So I have them written down here on my little card here. But look at this situation here. Now, I'm going to go back to, let's go back at least to 2010. Okay, now, this is what, okay, good. Commercial. Okay, I got the wrong. Did I do the wrong thing there? See, no wonder I put the wrong one up. Let me redo it. I was like scared to death. I was like, oh my god, I'm dead wrong on this. But hold on, I put up the symbol for the speculators. So let's get, these are the commercials, and again, GP. Okay, good. Here we go. Now, this is what I talk about. Okay, there's a lot of reasons why I like oil. Number one, we just don't have the capacity to produce. I mean, the world's producers don't have the capacity, the production capabilities to increase the size a lot more. And demand destruction can only do so much. China can weaken, et cetera, because it is a supply issue. It's a supply issue, not just with the lack of investment into fossil fuels. I mean, I'm not arguing here whether we should or shouldn't have bought fossil fuels. I'm just saying we need that. We haven't invested in a bridge to get to the clean. We all want clean energy. We all want to get rid of fossil fuels, but we can't get rid of them right now. I mean, I turned wildly bullish on this group, on the energy stocks in 2020, long before anybody else, for a lot of these reasons, because I saw the underinvestment in the area. And this is on my long-term calls. But anyway, but the point is, it's still not there. But we also have this thing with Russia. This war with Russia is not going to end anytime soon. That we're not getting the oil from Russia. We're not getting the natural gas from Russia. This is a supply issue. And this is what happened during the OPEC embargo of the 1970s. It's so important to know, to note. Okay, now, so you sit there to yourself, okay, well, so what's going on here? That's great. You have your reasons, your fundamental reasons why you think oil, and it came down, that's fine. It's now down into the mid 80s. I doubt it drops below 80. Could it go there for a couple of days? Maybe. But again, there's not enough production and not, with the absence of the Russian oil and the inability to increase production, it's just not. I just don't see it happening. And a lot of guys had the head of Goldman Sachs commodity research saying the same thing today on CNBC. But here we go. Here's the thing that I want to look at. Here is 2000. Here we are right now. This is what we're looking at is the crude oil. See up here what my arrow is? Crude oil net commercial futures positions. Okay. Now, what are you talking about? Oil is going down in price, okay? Oil is going down in price, and yet the commercials are buying. They continue to buy at an unbelievable pace, even though oil's going down. This is the same thing that happens. See, it's, I can't pull it up high enough, but there's 2022, 21, 20, 19. Here is 2018. Oil was going dead south, going straight down. And yet all these commercial futures traders were buying it. Well, what the hell are you talking about commercials? What the hell is that? Commercial traders are the ones who actually work in the business. Okay, you know how big a trading desk that Exxon has? They have a huge trading desk, and that's what they do. They trade oil because they have to hedge all sorts of positions from all over. It's not just the crude oil that we all know, West Texas Intermediate. They've got heavy oil, they've got natural gas, they got all sorts of different things they have to trade because they're constantly trading. Every oil company, every energy company has a trading desk, okay, of professional traders. They're not Wall Street guys. They work for the Exxons of the world, the Chevrons of the world, but they are, believe me, but they know the business because they have people. It's like, hey, things are really bad. Let's sell. These are the smart guys. The other position, which I just showed you, and I'll pull it back up, were the speculators. They're the people just betting. I think the market's going to go up, go down. They do analysis, but they're not in the business. They're not insiders. These are the commercial traders. These are the guys who work for the insiders. Okay, they're insiders. They're buying. Okay, when oil is going down, just like they did here. Okay, and guess what happened? Oil rallied 40% in 2019, and they started selling some of their positions. But oil. So let's go back and let's just see CL1. Remember how? Commodity GP. And I'll go back to 2010. But again, the smart money is buying during this decline. Okay? And then remember that crazy thing where it went to negative. But look back here. It says 2022, 21, 20, 19, 18. See how oil was getting clobbered? But the smart money was buying just like they are now. Oil's getting clobbered. The smart money is buying. Okay, now look what happened to oil right there. That may not look like much, but let me tell you, crude oil, bang, bang, 55%. I said it was a 40% rally. It was a 55% rally. I think it was the XLE, was the energy stocks rallied 40%, I think. I'll have to go back and look at that again. But the point is, see this? This is not what most guys are looking at, and that's what we try to look at here. I just think that that oil is going to go much higher, and these are the types of things I try to teach people that look at this specific thing. I'll just go back really quickly because I showed it to you, and I don't want to bore you to death here. But that first chart I showed you by mistake, I thought, well, it was nothing wrong with showing you the chart. NCN commodity GP. And again, this is the specs, the speculators, okay? The non-commercial futures, and their nicknames are speculators or specs. So what are they doing? These guys, these guys are selling. They're the dumb money. They're selling as oil goes down. Do you want to be with the dumb money? Go ahead, sell. I'm going to buy because I'm with the smart money. And it's okay. And there's another thing. I mean, talk about smart money and insiders. One of the best calls I've made in the last year was Microsoft, okay? I was pounding the table telling people, Microsoft, great company, continue, I'll tell it to you again, great company. But in here, let's get rid of these are these moving averages. Here, right around Thanksgiving of last year, Mr. Nadella, the CEO, came in and he sold $275 million worth of his own stock, personal stock. Okay, a couple of weeks later, when it went back up to that high, he sold another 100 million. It was 374 million to be exact. He owned the 2/3 of his stock. Okay, and I said right there, I say this stock is going lower. There's a difference between a really great stock and a really great company. Sometimes the stocks of great companies get way ahead of themselves. Sometimes the stocks of lousy companies get way below themselves and present great opportunities to buy, even though the company is not that good. Obviously, the company's going out of business. That's a whole nother thing. But a company that's mediocre and the stock gets really cheap, you can still buy it and still make a lot of money. You don't have to buy the best companies because it's hard for those best companies to get cheap. It doesn't happen very often. Okay, so this is a situation where I said they got to sell it. Sure enough, The guy saved himself $100 million by selling. And the biggest concern I said at the time is like, yeah, if the guy sells $20 million because he wants to build a new house in Hawaii, okay, fine. That's fine. Even 50. Well, you don't sell 2/3 of your holdings unless you think the stock's going to go down and not return to this level for a couple of years. So I'm not saying I'm telling you right now, he may be wrong, but insiders don't sell that kind of stuff until that happens. And the people have heard my calls, these calls that we've had in the past, these webinars. But when the insiders do something, you have to pay attention. All right. The insiders of Goldman Sachs took their company public in 1999. Why? Because they knew the market was out of control, and they knew, sure enough, what happened in 2000. The market crashed, went down 80% in the NASDAQ, 50%. Blackstone, one of the best PE private equity firms in the world, they've been private for 25 years. Why would you go public? Because they knew the market was getting out of control in 2007. They went public, sold their shares to the public in an IPO, and sure enough, 3 months later, this is 2007. 3 months later, the market rolled over and didn't look back. After another 50% decline. Glencore, great commodities firm, did the same thing in 2011, just before an 8-year bear market took place, et cetera, et cetera. Sam Zell. It wasn't an IPO. He sold his company. His life is real estate, but somehow he sold his company right at the top of the real estate. Why? Not because he was tired of real estate, because he knew it was ridiculous. As I'm getting out, I'll go. I'll do something else for a while. Well, believe me, he's right back in doing it again. But he sold at the top. This is what the guys, the insiders right now are buying oil, even though oil's going down. So this is again, some of the things, the tricks of the trade that I try to show that are going on in the marketplace, and things we try to look at and make these calls, because that's when you really get the big money. Don't get me wrong. If you bought Apple along with everybody else, you've done great. You are not a lone wolf. You're not a contrarian. You just, and as I said before, if you own Apple, and it's getting a little overbought right now, but if you want to pare it back a little bit, but never say never. Things are going to have to change. 10 years from now, something may go wrong. But you want to hold on to that stock. But my point is that if sometime Tim Cook sells a lot of insider trading all at once, I don't care what he says. I was doing it for personal. No, get out. Now, don't get me wrong. I mentioned Goldman Sachs and Blackstone. Blackstone, just because companies go public, that does not mean that the stock's going to go down. Sometimes you have a small company and they just need more money because they're expanding so much. They need more money, so they go ahead and do an IPO. Sometimes the best example is Microsoft. That was not a low for the stock. The stock had gone straight up. And it was only the venture capital guys, the guys who gave Bill Gates and his partners the seed money, they wanted to cash out. And Bill Gates, but he didn't sell. Bill Gates sold $1 million on the IPO. That was it. And the joke was that he needed to move out of his mother's garage. So he took a little bit of cash out. Other than that, he said publicly, if I could do anything, I'd buy on this IPO, not sell. And no, of course, he's been selling now, but that was after the company became, he's worth tens of billions of dollars. And so he's just kind of unwinding some of that, but he does it on a regular basis. So it's not, but my point is that be careful. Just because I said insiders, just because a company goes public doesn't mean they're the insiders are selling. Be careful on that. But that's the type of stuff that we look at, not just, hey, guess what? I hear that Bed Bath & Beyond is going to be up big this week in a big short squeeze. That's great, but we like to use things that are a little bit surer bets and not where somebody's trying to pump and dump
right.
stuff like that.
And Joe's asking here, would this, if I'm not trading options, is this something that I could still benefit from? And well, there's people there, Matt, that only trade stock, and you do provide recommendations for long-term investments, long-term holds, not just the day trading side. So you do kind of work with everybody, right?
Absolutely. Here's one example where we kind of do both. We sold these, and we bought some options in Johnson & Johnson. Now, here's a stock, again, let's see how it's oversold. There's another thing. Okay, see it's oversold in its RSI chart, and they've had a lot of problems. This whole baby powder issue, but it's a let's see, I'm going to pull it up here again. I'm sorry. I'm going to show you another chart. So on a technical, this is where we combine a lot of different things. Remember we talked about the Bollinger Bands? Okay, when a stock gets more than 2 standard deviations, well, sure enough, it got more than 2 standard deviations below its 20-day moving average. So we thought that was a great buy, but I also think it's a great long-term buy. I mean, this is still, I mean, even if you're, you know, what the best thing to do now when you're not sure, when the market's bouncing the way it is, geez, I'm not sure what this is. Is this just a bear market rally, the biggest suckers rally of all time? Or is this the beginning of a new bear market? Or is it something in between? Well, when you get a stock that is, you know, it's been, you know, it's done well. Let's go back to 2020, no, 2018, 2018. Oops. Sorry, hold on. See, this stock hasn't done as well as a lot of others, and it's down. Okay, it saw a nice rally. Of course, it's had some rallies when they got their. Let me get some of the this market. This chart is so busy. But see, it's down a lot more than it's underperformed the market recently. Okay, so what do you want? The defensive names. If the market goes down, okay, the defensive names are going to do well. The consumer staple stocks, the healthcare stocks, utility stocks, and even the energy stocks. Okay, here is a healthcare stock, which is also kind of a consumer staples. I mean, whether you have Band-Aids and Q-tips and things, no longer buying baby powder. But the point is that if you've got a stock that's beaten down, if the entire market goes up, rallies, you know, Apple's really overbought and it's overowned again. So yeah, sure, it's going to go higher and it's going to go a lot higher. But why not broaden out? You can, you know, it's a defensive name that's down on its back. So a lot of these defensive names are going to underperform. This one's not. Because, hey, what am I going to, I mean, if I'm a portfolio manager at a hedge fund or a mutual fund, and I'm sitting there going, hey, I missed a lot of this rally. What can I buy? What can I buy to help me play catch up? Well, there's this stock that trades, you know, 10,000 shares a day, and it looks like it's going to really take off here. Well, that's great, but I can't buy enough of the shares for it to make a difference on my big portfolio. You know, they've got these, you know, billions of dollars portfolio, or even hundreds of millions of dollars. That's not going to make a difference. But boy, if Johnson & Johnson rallies strong here, I can buy that stock. I can buy as much stock as that stock as I want. I can buy as little or as much as I want. And if it moves, so in other words, I can get a big enough position in that thing where it can help my performance into the end of the year. And this is the time of year where they play that game. And that's, again, you know, we always hear, we only invest on the fundamentals. That's baloney. They look at all this other stuff. You don't think all these hedge fund managers, every single one of the best hedge fund manager I've ever heard looks at technical analysis incredibly carefully. Now, what I just talked about was a positioning thing. That does nothing to do with technical analysis, but they look at those things, positioning, sentiment, and all these things. And that's what we try to help people out with. So on Johnson & Johnson, not only do we like this for a short-term play, I like it for a longer-term play as well.
It's not just that, Matt, but also you have I mean, everybody says trust their gut, right? But I mean, if you just started trading, man, your gut is not that good as somebody's gut who's been doing it for 40 years, which sounds so crazy to say, but like that is just like, you know, honestly, like if I would be starting trading first day, or even if I'm not seeing the results that I want in my trading, then obviously, number one, find a mentor, right? An educator, a professor, whatever you want to call it, trading partner, coach, and you know, have him help you. And that's really what you do there. But I want to give a big shout out here. C. Kentman in the chat. What's up, man? Welcome to the family. Let's go.
Thanks for joining. And I think you'll really like this, especially, you know, well, in the rest of this week and starting tomorrow, we could have some really interesting trades. Like I said, don't get discouraged. We had this earlier, one point last week, at the very beginning of last week, it was very, very quiet. And people were saying, geez, I just joined. There's not much really going on here. Well, there was nothing going on in the market that day. And it was right before the CPI number came out. And I'm like, people are just sitting on their hands. I don't want to do things just to do them. And that's just a way to lose money. Let's wait and see, especially when you're in options and you have an expiration date. If you buy a stock, you can, if it does nothing, that's fine. You can buy it and let it sit there for a couple of days. But if you want to go into options, you have to play a little bit. You have to wait a little bit sometimes. And so, you know, if we see that early next week, don't get discouraged, because later in the week it's going to pick up. And besides, I don't think we're going to see that things quiet down as much as they usually might, just because we have so much going on in terms of whether it be Taiwan, the Fed, the retail sales, the consumer, you name it. There's just all sorts of things going on. The tech sector doing well, and the chip sector not really doing as well as it should be doing. The bond market bouncing all over the place. Everybody was all excited that interest rates were coming down. Well, now they're going back up. And again, so I just want to show you one other thing here that I've been talking about. I'm going to go back to this other vehicle here. Hold on. And we'll go back to this thing here. I'm going to show you, we talk about the bond market, because that is so vitally important to what I think is going to happen the rest of this year. And so many people have just made the assumption that the Fed is definitely going to pivot, interest rates are definitely going to go down, and everything's going to be hunky-dory. Well, guess what? Last week, when everybody assumed that all that data was going to would absolutely make sure that the Fed would pivot and the interest rates would go back down. Well, guess what? Stock market rallied really nicely in anticipation of that. The stock market didn't. The interest rates went up last week, not down. Okay. Oh, by the way, here's that Johnson & Johnson trade I was talking about. How it became incredibly just as oversold as it had been several times, and it looked like a rally. Sure enough, we made some nice money, made a couple 100% on those options. But anyway, let's look at this. Oops, gold. Oh, shoot. I guess I didn't. Did I not? Okay. I'm sorry, but I can pull it up. I'll go back to my Bloomberg and I'll pull it up. Okay. Now, let's just go. Take me 2 seconds to pull up the chart. Government. So this is the yield on the, this is the yield on the 10-year Treasury note. And this is what we have here. We have a classic head and shoulders pattern. And so, every people hear these terms and what the hell do they all mean? And it's more than just a bunch of lines drawn on a chart. But let's go over this one here. See, what head and shoulders is easy to see. I mean, let's bring it in a little bit bigger so you can see it better. Bang. Oops. Oops. Let's see if I can. There we go. Okay, so you can see it just looks like a head and shoulder. Here's the left shoulder, here's the head, the right shoulder, and what they refer to this is as the neckline. Okay. Now these are interest rates, not the prices. Remember, prices go in a different direction, go in the opposite direction of interest rates. But so this neckline, one of the worst things you can do is for any asset, if it breaks below the neckline, that means it's going to fall hard. In this case, interest rates falling hard would be bullish, right? But it started to do it, but it was a bit of a head fake. Now it's back above that pattern. If this thing spikes higher, that would be a failed head and shoulders pattern. And there's very little that is more bullish than a failed head and shoulders pattern. The problem is, in this case, it will mean higher interest rates, which would be bearish for the stock market. And so this is something we have to watch very closely, because the interest rates are not pointing to the same thing that the stock market's pointing to. Yes, they've come down and they've held, so it's okay. I'm not saying, oh my God, interest rates are going straight back up, but we are in this, until this thing really breaks well above 2.7% or well below 2.7%, we don't really know. So the stock market is making a big bet that the interest rate, that the Fed is going to pivot soon. And if that's not the case, that's going to be, so again, whole head and shoulders patterns. These are the types of things that we talk about. There's all sorts of patterns, whether it be rising wedges, descending triangle patterns. We don't want to get too much into it, because to be honest with you, some technicians make it too, because they want to make themselves look smart. But there's plenty of ones that are easy to learn, easy to know, but not so many of them that it makes it ridiculous. And so that's what we try to concentrate on, our educational aspect.
And Matt, since we started this chat room, I remember when we started it, just you and me there. Now, so many traders there that have been helped by, the Melee touch, and like up to this point, right from when the chat room started, what is the portfolio performance for this chat room since it started?
Gosh, it's got to be, well, it's, it jumps around. It's up 300%. 300% is,
and just for everybody to know, like, if you're up 300%, you're not going all in on any position. This is all little bits. So it's not like oh, you made one trade and it went 300%, because you can see all these trades are way more than 300%. But if you consistently get, and that's a key word here, Matt, consistency, right? Everybody can get lucky once or twice, but then can you consistently do that, right? And that's where your experience really comes into play, and the financial instruments that you're using there, right?
Right. Oh, there was one person who asked one time, and brand new, they're in, they said, this looks like you're really confident about this trade. I'm thinking about I've got $10,000 and I'm going to put it all in this trade. I was like, no, do not do that. And I don't know whether they did or not. The trade worked okay. It worked well. It was, well, I mean, compared to a stock trade, I think it was up like 50%. So it did very, very well. And maybe they would have, but it's like, don't ever, especially in options, don't ever put 100% of your portfolio into anything. Very, very rarely do I put more than 10% in, and very rarely do I put even as much as 10% in. That's just these are options. These things can go to zero. I mean, so you can lose a lot of money very quickly by doing crazy things like that. So yeah, we try to make it, we're making here and there, and some where we lose money, but the whole idea is to get as many winners as we can, and to make sure the winners are real nice trades, rather than just ones that are getting us 10 to 15% like an individual stock does. It gets us 50%, 75%, and then, as I showed you, some of those ones that make several 100%, and then a couple of times a year we like to get, and we have been able to get some that are even over 1,000%. But yeah, this is a process, and it's not, I mean, you have some weeks where you're just like, what the hell is what, I just can't do anything right. But those weeks are fine when you're limiting what you're getting invested, because especially when you go into these trades, when you make, if you make whatever 10% in the stock, that's great, and it made up for the 10% you lost in some other stock. But what happens if you lost 25% in an option? Okay, you're mad at that, but then you can make 300 or 400% in an option trade, and you way more than made up for the loss. How many stock? Well, again, I mean, today you had Bed Bath and Beyond up 70%. Okay, that's not 300%. Yeah, that's good. Don't get me wrong, but those don't happen very often. Whereas these moves in the options market can, and you don't have to make these huge bets to make some real good returns, and then you add them all together and you get some really, really good, really nice thing. And I think when we get into the fall, you're going to see even more volatility, more ups and downs. Lately it's been all on the upside, and for a while there in the spring it was all on the downside. I think you can get them in both directions in the next couple of weeks, starting in the next couple of weeks. If not, it could start tomorrow with the Fed minutes coming out. But it looks like the line of least resistance is higher. We're going to continue to play it that way. But when the turn comes, we're going to get aggressive, because I just don't think that the market that the valuation levels in this marketplace are just not conducive. We say a bear market. Also, when the bear market's over, the market takes off. Yeah, that's because when the bear market's over, it's usually trading at 14 times, 12 times earnings. It's trading. It got down to 16 times. That's by far the most ever in the last 50 years. Okay, the most expensive ever. And then you go by sales. It bottomed. I mean, it's trading at 2.5 times sales. That's the level it reached at market tops of the last 20 years, not market bottoms. So this market is expensive, and it's going to be hard to really for the market to go a lot higher. But that's okay, because I mentioned earlier, we have the tools. We can win in both directions, and that's what we want to be able to do, and that's what we have been able to do, and that's what we're again looking to do. I don't want to say, hey, geez, nothing's going to happen between now and Labor Day. A lot could very well happen, especially with the Fed meeting a week from now. But I do think after February, we're going to see a lot of action. We want to be all over it. And it's not just going to be in the stock market. We'll be looking in those overseas markets. We'll be looking in the oil markets. We'll be following politics. Does Germany look like they're going to give in? Did say, geez, we cannot go through a cold winter, and they give in to Russia. And then all of a sudden the oil supplies do open up, and then I would completely change my stance on crude oil. I want to go out. I want to short the energy stocks. So lots going to happen, not just on the financial side of things, but on the political side of things. We have midterm elections coming up. It's going to be a lot of fun, and really exciting time for the markets.
Yeah, I mean, you can see the meme stock traders are back. A lot of things are happening in this market, and these are pretty historic times, Matt. I think it's really good that the chat members and new traders can actually digest this and really live it up. Not just live it up, but actually make money out of it, right? Not just look at it in a documentary 4 years from now, but actually say, I was there, I traded that, or I shorted that, whatever. And really, this is a great benefit advantage for people because you have all this situation in the economy. And I think this is a good way for people to make an extra buck, even if you're doing it part-time, right? Or if you're learning, this is only going to make you a smarter individual,
Right. I
regardless.
mean, and for people who are very new to it, it's always good to do what they call paper trades. And in other words, you just write the trade down on a piece of paper. You don't invest money, but you can, because believe me, if I mean, that was a long time ago, Laszlo Barini, if you may have heard of, and he said, nobody's a trader until, first of all, they made a mistake where they bought a stock or they should have sold it. But nobody's a trader until they've lost money on a trade. That's just part of it. The whole idea is not to lose a lot of money and not to just do it blindly so you lose your shirt before you even get out of the starting blocks. And that's what we try to help people do. So that's, again, this is it's a tough business, but it's I guess the thing that's helped me or helped my success is in helping me teach people is that it's not as complicated as certain people like to make it out, because they want to make it complicated because they don't want everybody else to get involved. So that's what that's what I'm trying to do. I think the people seem to be pretty happy with what, or very happy with what we've been able to do in the chat room. And the whole idea is that you make enough money that it pays for itself. That it pays for itself very quickly, and then it is gravy after that. And so, I'm sorry. Oops, I did it again. I put an SPX for the stock, not an index. This is the index. But again, going back to just look how it is, right to that 200-day moving average. That's going to be very interesting to see if you can break above that. It's just straight up. Now that's the let me pull up one other chart here, index GP. This is just all this one has is this one just has the closing prices. They give you the closing prices, and look how it's been the last, we had a couple of days there, but really since here we've had 3 days down. That was a sideways day. We're going 2 or 3 weeks where it's just straight up, and that just usually doesn't last for very long. So again, we're testing that 200-day moving average. That's going to make it very, very interesting. But just trying to talk about just a couple of points and comment things that I've been talking about. Two things. Number one is that have things really turned around. Okay, just remember that no time since the Great Financial Crisis, we've always needed something to change. So a major change in policy to give us a bottom. In 2008 or 2009, I'm sorry, it was the change in policy where the banks, they changed the mark-to-market rule. So the banks didn't no longer have to mark their price of their portfolios every single day and raise more capital to meet their margin requirements. Okay, so that's what they were already flooding the system with liquidity, but that wasn't working, and they finally changed the market-to-market rule, and the market just went straight up. In 2011, it was when Europe bailed out Greece. What they really did was bail out the European banks, but that turned it around. In 2018 was the Fed pivot. It was actually the end of 2018, early 2019, the Fed pivot. In 2020, when obviously the entire global economy was shutting down, the Fed came in with massive amounts of liquidity. So these big changes in policy. Right now, everybody is assuming that a big change in policy is right around the corner. The Fed's telling us it's not. And I don't think it is either. And I just don't, and the other thing too, you have to remember about inflation is we need a certain amount of inflation. We are in a bond bubble. We have a bond bubble. It's not, everybody's been talking about too much sovereign debt. We have over $11 trillion in corporate debt. Okay. These companies, the Fed has bailed out too many zombie companies. They're not going to be able to make these payments. At some point, they're going to default. The only way they can get out from a corporate bond debt bubble is for massive defaults, which is not good for anybody, or inflate your way out. So the Fed, there is the reason I would say, despite what the Fed's saying, they do not want inflation to get back down to 2%, but they need it to get lower, okay, because they can't, you can't have 8%, 9% inflation. But the problem is that when they lower it to 4 or 5% and keep it there, that's not going to give us the kind of growth that we need to maintain 19 times earnings is what we're trading at right now. You're going to have more multiple compression, as they say. And multiple expansion is just a fancy name for saying, yeah, the stock market is getting more expensive. And the only time the stock market's been able to stay at exorbitant levels in terms of valuation, okay, was when there was massive QE being put into the system. That's what happened in 2020. That's what happened for most of the time between 2009 and 2018. It happened in 2019. Again, remember, in September until early 2020, for 4 or 5 months there, the stock market went straight up. The economy didn't get better. There's a new thing called COVID was coming out, but nobody cared. And the reason, because the Fed was using a secret QE program to fix the system after the repo repurchase agreement. The repo market froze up. Okay, and what happened? What about the 1990s? There was no QE. Well, it was a different kind of liquidity program. We had the Fed and other global central banks. They had to feed money into the system because people were scared to death that Y2K would become a problem. If you're not familiar with Y2K, you should look it up. It actually was an emergency they were able to avoid. But at the time, all the computers were set up for 2 digits. So each year, your bank account, it was 1989, 1990, 91, but then it didn't say, it just said 89, 90, 91, 92, 93. When it got to 99 and would go to 00, that was going to tell the computer 1900, not 2000. Okay, so unless you're around, so if you were alive in 2000, your bank account would go back to what it was in 1900, which was not much money. Okay, most people weren't alive, so your bank account would go to 0. And they were scared to death that people would start pulling their money out of the banks, and that doesn't work in a fractional banking system. So they provided all this liquidity so that the markets would stay stabilized, so that the companies would have money to fix their computers. It spent a half a decade or more, really a full decade, and they did it. It worked. And guess what happened? Once they were 2 months into it and they knew it was working fine, they pulled the plug. And what did the market do? It crashed. It went down 50%. The NASDAQ went down 80%. It topped out literally to, I mean, we had in the S&P, it came back up and retested the high in the fall of 2000, but the NASDAQ just went down. And then after, in late 2000, it crashed. Okay. That's what happened. That's what happened. And so we're going through the same situation now. I mean, in 2018, that's why the Fed had to pivot, because the high yield market was falling apart, not because the stock market was down. They don't care if the stock market is down. The bear markets are normal. They were worried about the system. Same thing happened in 2020. Now they've supplied this massive amounts of liquidity to the system. They have to remove it. If they don't remove it, okay, if they don't shrink their balance sheet, the stock market is going to build another 1999, 2000 style bubble. We can't afford that because it will inevitably burst. And when that inevitably bursts, with the amount of debt we have in the system today, the system collapses. We cannot have that. Okay, right. So they have to pull things back. That's going to create a lot of volatility for the rest of the year. It's going to be a lot of fun for those of us who can trade it actively.
Oh, all right. So I have 2 questions here, Matt. The first one, Google or Apple, and which one and why? Right? You know.
Okay.
And then after
I'm going to say both. I mean, let's look at the charts. I'll say I got to go with Apple. If I have to do one or the other, Apple.
We're talking long term. Yeah, we're talking long term.
Long term, both of them. Apple. Look, the free cash flow is just ridiculous. The one thing you worry about, because they are not as innovative as they once were, but that doesn't make them a bad company. I'll never forget in 1999, summer of 2019. And people were saying, "Oh, Apple's not innovative anymore." You know, I was like, "Pound table, buy Apple, buy Apple." You see the free cash flow? Who gives a flying? You know what? If they're not innovative anymore, you can only come up with a new iPhone every so often, and they have a lot of other things that that may become glasses, cars, etc. But the point is that you don't want to sell Apple. I mean, if it's getting overbought near term, and I think that. We might even buy some puts against it at some point in the near term. So you can see this RSI see how it's getting overbought there. Can it get up to 180 again? You know, it's just the stock at 28 times earnings is expensive. I know that you're saying, wait a minute, It's such a great company. How could 28 times earnings? But history tells us that that's the case. And so it's a little crazier. But you know, if you want to sell, I'm saying if you own it, don't sell it in your long-term portfolio. If you want to buy a few puts in it, if it gets up to 180 in a straight line, this thing is going to get even more overbought. And I would buy some puts, and I will buy some puts if that happens. But it'll be a short-term trade for a week or two, maybe only just a couple of days, and make a little money. And I wouldn't touch, you know, the long-term holding Apple. But it's just fundamentally, there's just two go. Tim Cook has just done an unbelievable job, and you know, so you know, again, you want to hold on to that. However, Google, man, you know, look at this one here. It's recently, if I'm wrong and the market keeps going higher, look what Google's going to do. One of the things, when stocks get stuck in a sideways trading range, when they finally break out of that range, they tend to really take off. Now, let's get rid of all these moving averages. Boom. Okay. Now here's Google. First of all, coming out of the pandemic, Google was the best performer of the FANG stocks. It just went straight up. Okay. Then it got cut, you know, kind of caught in a sideways range. See how hard it got hit. But look at this here. We're going to look at the sideways range that it's just broken out of to the upside. This is bullish. So let me just get here. Right. Bang. Okay. Let's see that sideways range that it was stuck in. It's just okay. It's just starting to break out of it. Let's zoom it in there a little bit. But it's breaking out of it. Oh, shoot. Let me try it again. Hold on. That's going to get you a better look at it. Hold on. That should work. There you go. See how it's breaking out of that range? That's a nice breakout. Now, it's not crazy overbought. It'll probably go up a little bit more. What I'll be looking for is does it come back down? After it gets overbought, it'll probably come down. And it may even get slightly back below that top line. But if anywhere in that area, it works off, you know, it digests the gains, works off that overbought condition, and then rallies again, boy, this stock is going to 150 by the end of the year. So I like both of them. It's just, and then going back to the fundamental aspect, they're so cutting edge. Yeah, there's some competition, and there's paying for content, and but say their best years behind them. That's crazy. They are so important. They are such a good company. We're always ranked as one of the top companies to work for. My nephew works for it. He's only been working there for a short time. I haven't really talked to him about it. But
we're on it. We're on it right now on YouTube. So yeah.
But the point is, they're both great companies. If I had to take one, I would say Apple. But boy, you can't go wrong with either one. And I will say right now, because Google's been beaten up a little bit more than Apple. I say a lot more, but it would be the better buy right now. If I had to buy one right now and didn't own either, I'd say I'd buy a Google. But hopefully I'll own. Hopefully you own both, and I'd say, okay, if you're going to add one, add to Google now because it's cheap. That's the other thing too, is it's cheaper. I'll just pull it up here. I'll show you.
Yeah, and Craig is saying on the YouTube side, very clear information. Well, look, Matt's been doing it for 40 years. That's what you get with that.
Exactly.
Very straight to the point.
Say 23 times earnings, so it's cheaper. It's not cheap. It was down to 17 times earnings when I really was pounding the table on this one. Now it's up to 23, but it's still cheaper than Apple. So I would like that. But they're both great companies.
The good thing here, Matt, is that remember, like you do provide these killer option trades, right? But you also help long-term investors strategically buy, analyze a company, free cash flow, operating margins. You really know these numbers very well, and you know how they work. And really, you help people with all different, I guess, of trading and investing goals, right?
Right. I mean, there was one where we made, I even recommended it a couple times, but it's simple. I mean, what is the simple reason? Well, I really loved energy. This is Chevron, but look at it right here. Bang. One of the it's still paying a very nice dividend. But here, see, it's 10 times earnings. I mean, it's 10 times earnings, eight times forward earnings. But it's got a when it was trading, when I really pounded the table on it, was trading 7.5% dividend yield. You can't beat that. I mean, market's going down. That's what happens. You one of those dividends when the market's going down. Now, first of all, you only paid 20% on the you pay very low. Very low. That's just an alert. Let's go 86 just to get out of the way. But the at that point the market was really high, and I was saying buy these stocks because they'll pay you to wait. And again, it still has a nice dividend at almost 4%. But boy, when it was a 7.5%, that was just a very simple trade. I was like, forget about.
Right.
It was also very cheap and a lot of other things, but I'm like, this market goes down and you can collect a dividend. Why not? And that's
everybody was. You were one of the. Well, you've been bullish on commodities when everybody was bearish, and then you were bearish on the market when everybody was bullish. You were, I mean, one of the few folks there that really stuck to their guns and been calling it right the entire year. And I guess that helps you regardless, because when you have your chat members, being the time I've been here, you've always tell them like, hey guys, I really think there's a correction coming. I would lighten up on stocks and just hold cash. Maybe we can get some better opportunities on good quality names down the road. So I think it's good that you do that with all the folks here, Matt. And now as far as, okay, so now this package that was passed recently for the semiconductors and all this stuff, what is your take on that whole thing? Is it good? Does it help us, or where does that put us?
Well, the thing about it, yes, it's very good, but it was always going to pass. And I think everybody, all these institutional, whether it be the big mutual funds, the hedge funds, they all have people in Washington, D.C. that they pay to tell them what's going on, to tell them, is this going to pass? Is it not going to pass? And no matter what they said, they talked about it maybe not passing and all that stuff. This again, excuse me, I'm going back to that SMH, which is the, which is the semiconductor ETF, the chip ETF for the chip stocks. Let's get this out of here. But again, the thing about it is that it's kind of priced in because there's no way they could not pass that. There's just no way. They'd all lose because Taiwan has got such a lock on semiconductor manufacturing now. We had to have it because we have to have Intel and other people, but especially Intel, to build a big enough factories both here. They're going to do it in China. I'm sorry, China, not China. In Germany, in Ohio, and then Mexico. We're way too dependent. What if they take over China? China takes over Taiwan. We're screwed. Okay, so the people in Washington, D.C. were telling the big money, saying, this is going to pass, don't worry, this is all just jawboning. So this is what we had when this is what we got, the rally we've got. Now, does it mean it's going to break out? It's positive, but the problem is that we have Advanced Micro Devices, Micron Technologies, NVIDIA, several other names. The one that was positive was Texas Instruments, but all the other guys reported, weakening demand, whether it be, some of them blame it on gaming, but others were talking about PCs and just in the general overall demand. That's not what you want to see. So I'm worried about this. I think the news about this thing passing is priced in, but again, I'll know I'm wrong if we get the break above that area. Now, if that happens, then I'm going to, instead of looking to buy puts at Advanced Micro Devices, which is a great company with great management, then we're going to be, so that's going to break out. This thing breaks out above its early June highs. This thing is going to, I'm sorry, that's in the July. That is the June highs. I'm sorry, early June highs. This stock and breaks above its 200-day moving average right there. This stock is going to take off. So I'm going to be very nimble on this group. I'm worried that it's too much of it is already priced in. The good news, and if I'm wrong, I'll be ready to pounce on the upside. If I'm right, we'll be looking to buy. Right now, I'm flat. Right now, I'm just saying, hey, let's step back and keep an eye on it. You don't sometimes you get to critical junctures. You have a feeling of which way it's going to go, but you don't want to make a big bet in one direction. And then sometimes we go in and we buy what we straddles or strangles, which will when we're sure, hey, it's going to break out one way or the other tomorrow because some big news is coming out. And then we do those kind of strategies. But most of our strategies are very, very basic. Buy a call, buy a put, buy it here, sell it there. There are places that people do very sophisticated trading. That's not really what we do. We're looking for key turning points and taking advantage of those.
Right, and this is basically this is money for like building the facilities to build the chips here. So I mean, that's not immediate. That takes some time to build
Right,
those
right.
plants.
It's
This
2 years, 2 years.
yeah, $10 billion plant. Like
Yeah.
Intel, they want to build a huge one. That's not a 1 year thing, right? That's a multi-year
Right, and
project.
Intel. I mean, it's a lot of people worry that's going to become the next IBM, but they're also too big to fail. And they're sorry, they're not too big to fail. They're too good to fail. They're not that great, but they used to be the firm. But now the government has to make sure they're too big not to fail, because the government is going to do whatever it takes, whether it be government contracts, military contracts, because they have to succeed, because we have to be able to make chips here in the U.S. again. The reason why Intel's doing it is they're the one big enough. You think of Advanced Micro Devices, Micron. These guys are maybe better companies, but they're not big enough to build the kind of become the kind of manufacturer that Intel will be. And so I like them longer term. And even though people think they're just going to be the next IBM, I think they'll do better than that. And again, it's not that, geez, I think it's going to be the best chip stock in the next 5 years. I just think it's going to be a good one. It's one that I want to have money in. And again,
Right.
I'm kind of building that position over time. I keep saying, if you want to buy Intel, buy a little bit each month over the next 6 to 12 months. Then you're going to have a great nest egg. Stock's going to go higher in the next bull market, and they'll ensure to go higher because the government has a vested interest in them doing well.
All right, and switching a little bit here to the inflation side. So gas, did go down a little bit, but I don't think food did. I just looked up at the food on Walmart, everything they have, and some other places. It looks like the food is the same price. So like, what's your view on that particular side of the inflation?
Yeah, and again, this is because of the supply. It's a supply issue, and now they have. It's kind of weird because you say, okay, well, they have. The supply issue is going to be back to again with the sanctions. There's no question that Russia is really trying to put the screws on Europe. They really now, and the thing is, on the food side, it's even worse because there's plenty of places to put oil. We don't have enough oil. We can make it. If Russia comes in, then the oil prices will come down because the supply of oil will pick up dramatically coming just from Russia. Now, will you say the same thing will happen when coming from the food? The problem is it's all stored up in Ukraine and Russia. It can't. The Ukrainian food can't get out because of the ports of the Black Sea that the Russia has tied up, and so they have no place to put it. And a lot of these crops are going to spoil, and so. And you can't just pump it out of the ground tomorrow. You can pump out of the oil out of the ground. I mean, heck, they can pump it out of the ground in freaking Alaska in the dead of winter. They can do it at any time. The next crop isn't coming around till next summer. Okay, so if that stuff just spoils because there's no place to store it because it's all backed up and sitting in ships or whatever, and they say, oh well, we got one thing. They got one ship going out of the Black Sea. Oh, that's great, one ship. And they can't train it out as well. And as Rodrigo mentioned, the food prices are you're going to pay whatever the food prices are. Okay, you got to feed your family. Okay, you got to feed yourself. That leaves you less money for other things. And remember, 64% of Americans live paycheck to paycheck. So, that's why you're seeing this build up in the revolving credit, which includes credit card debt at an all-time high. How much higher can they go? They can't. Right. They're going to have to start pulling back a little bit, and because they have to be able to pay for food. And and in Europe, if this becomes, you could easily have people forget the last time we had this crisis back in 2011, and there were riots in the Middle East. That was a big deal. But people forget there were also riots in London and Paris, and advanced Western countries because food prices have gotten too high. If you got that, you get civil unrest. That's not, civil unrest is not good for the stock market. So, and it certainly was not in 2011, and won't be if it happens this year. So this food issue is something that we really have to be concerned about.
Right, and there's this interesting thing I've always tried to think about what would happen, right? Where you get inflation, right, and companies increase the prices of their goods, right, for food specifically. And let's say inflation comes down. When does a company that was making profit during inflation, when do they actually say, okay, we're going to drop prices because inflation came? Does that happen? Do they keep those prices? How does that work up at the end, Matt?
They keep the prices up. I mean, it's the energy companies is funny. The energy companies, the old saying is prices go up like a rocket and down like a feather. and that's true. They've had a lot this time around because of the political pressure. Gasoline prices have come down faster than they usually do because the Biden administration is in there just, skewering the energy companies, saying you got to make sure your outlets are lowering prices as oil goes down. It still hasn't gone down as fast as crude oil has, but it's gone down quite a bit. But food prices, as you mentioned, haven't come down at all, and they won't get this. Well, will they get the political pressure to get it? Maybe they will, but it's much more diverse. It's not just one commodity. It's many different commodities and many different inputs. It's I hate to say it, but it's human nature. Why would we lower prices? People aren't used to lower prices, it only happens over lower prices, especially on commodities. You keep it up and just leave it there. But what has to happen is somebody just saying, okay, I'm going to go out of business if I don't get a better market share, and then they lower prices. And eventually it will happen, but it won't come immediately. And besides, I still think we worry about, again, this all will none of this will happen if the sanctions stay on Russia and Russia doesn't unlock the food and oil to the world. Again, inflation is good if it's demand driven. It's not good if it's supply driven, because people can afford it. It's demand driven. Hey, I got a great job. I'm making a lot of money. I don't care if the thing costs me more money. Go ahead, buy it. But when inflation is going up for supply reasons, and it's on products that you absolutely have to have, that leaves you less money for other things, and the economy, that's what's called stagflation. That's why this is the only real comparable difference is late 1970s, early 1980s, not the 1946, as some people are trying to say now. It's ridiculous. It's something I talked about on my Zoom call today. It's like people trying to compare it. Doesn't make any sense. I mean, yeah, we had inflation and the worst of supply issues after World War II, but the global economy right now is slowing. The global economy was booming like it has never boomed ever before, and it probably ever will again, because they were completely rebuilding Europe, which was in rubble, just rubble. Much of Japan was rubble. Much of the Pacific was rubble. And the GIs, they got out, and they had mortgages 5% down, guaranteed. A bank, if you went in, you were on the GI Bill, you gave them the piece of paper, they had to give you a mortgage with only 5% down. Back then, that was unheard of. Nobody got for less than 25%. And of course, the consumer confidence was great. It's like, I've got a job, the GI Bill, they got college degrees they never thought they could have, and it just was just an unbelievable, completely different time. And again, so that supply-driven inflation became demand-driven inflation very, very quickly. And everybody was having babies because they came home from the war, and babies are, create all sorts of, economic gain. So, but anyway, but the point is that it's the thought that inflation is going to come down as quickly as the markets are predicting right now just doesn't make a lot of sense to me, unless they really know that Russia's going to, that Putin's going to be allowed to win, and that they're just going to let him do what he's done and take all the sanctions off, because he does not have, he's not feeling any pressure, because he's still selling his oil to China and India, and their economy's slowing, but not in a major way.
Right. I mean, this could extend for decades, who knows? Okay, so now we're talking about the consumer, right? So I mean, we talked about the consumer, I think last month and when Netflix reported, we've been talking about it. How do you feel about the consumer in general right now, considering the inflation data?
Well, it's consumer. Obviously the consumer feels a little bit more comfortable because you have the with oil prices, gasoline prices haven't come down, but food prices have not. And again, you look at this. Another thing too is what I talk about. Again, I'm going back to my my cheat sheet here. And I will see here, oops. That was gasoline. I want to do, there it is. Okay, here we are, PI. Remember just a short time ago, like a month and a half ago, certainly 2 months ago. Let me just pull this up before I finish my thought. Okay, everybody's saying, oh, the consumer's in unbelievable shape. And they're not saying that anymore. Okay, Walmart reported good earnings today. They're not saying the consumer's in unbelievable shape. They're just saying things are better than we thought, or things aren't as bad as we said a couple of weeks ago. but it's mediocre. They're not, nobody's saying the consumers in gangbusters. Saying consumer confidence did improve slightly, again, because oil prices, gasoline prices did come down. But this is the savings rate, okay? People they don't have savings to go on. That's why they're putting it all in debt. That's why they're running up their credit cards. Okay, look at this. You know, everybody got scared to death, so they started saving during the pandemic. You got to go back, all the way back to the, to the crisis to have a savings rate as low as this is. People don't, remember, 64% of people in this country live paycheck to paycheck. They don't have savings. Okay, so this is a big problem. And if energy prices, again, they say, oh, people love the fact that the oil prices are at $80. Okay, that's still 35% higher than it was last year. Okay, and it's like, let's see how much, commodity GP. And they make it sound like oil's dropped down to $40 again. I mean, this is not inexpensive oil. Let's see if I can get this here. Okay, pre-pandemic levels. Okay, let's bring it here. This was just before the pandemic. Oop. Okay, it's come down a lot. There's no question, and that is helpful. But to assume it's going to go a lot lower, given what's going on in the war, this doesn't make a lot of sense to me. Pre-TAM level, 37% higher still than the pre-pandemic level. Okay, this is not cheap oil. Okay, at $86. I mean, come on, look at the averages here. It's in the 40s, going back the last decade. It's basically it's twice what the average is of the last. We're talking about pre-pandemic highs, not the average of the last 10 years. So, and then we have, well, and again, I think I showed this earlier. Maybe I did. Look at the, this is the Bloomberg Commodity Index. Oil prices, a lot of commodities have not. Okay. Okay. Look at this. This is what, yeah, it came crashing down, but look how back up it is. Okay. Copper's back up, wheat's back up, corn's back up, gold's back up, et cetera, et cetera. These are the types of things. You're trying to tell me we're going back to this? Okay. This was all caused because of the, of course, because of all the massive liquidity, not just liquidity from the Fed and other central banks, but because of the monetary stimulus. Okay. Then it got crazy because this is when Russia invaded Ukraine. And until that change is going to stay up here, you're trying to tell me we're getting back down to this kind of level anytime soon? Sure doesn't look that way because the trend is going right back up, and inflation is going to be a problem. So I don't want to sound overly bearish here. I just think that the market's pricing in this. It would be great if this rally had taken place over the entire second half of the year, not in 2 months. And now we got people playing with meme stocks again. The Fed doesn't like that. I'm telling you, the Fed doesn't like that. They one of the things they said before they started tightening is that there's too much froth in the market, and now it's getting creeping back in. So that's a problem. But anyway, we've been going on for about an hour 45 minutes. We kind of sort of wrap things up. But are there some maybe some individual stocks? A couple of people asked about some stocks, but maybe some other ones. I don't know, Rodrigo, if you've got any ones in the chat room that put some numbers in. Some symbols or stock names, and Rodrigo can feed them to me. And while you're doing that, I'll do a couple on my own, which I know a lot of people. We were talking about Apple. I'll do Tesla as well, and go ahead and put some names in there. And Rodrigo will give them to me, and we'll go over a couple before around 7 o'clock or so. We'll wrap things up. Whoops. Okay. Well, this is Apple Computer. Now, again, stocks getting overbought. And so just be a little careful about it, especially, again, you got long-term holdings in this thing. That's just fine. You should be very happy and continue to hold on to, oops. Shoot. Well, here's 2017. Okay. But you can see how, that 180 level, I mean, if you want to bet that it goes that higher, that's $7 higher. That's, if you're in the options, that'll be good. But you can see it's not the most overbought it's ever been, but it's getting up there. Okay. And so I'm getting a little concerned about this stock. Great company and a great long-term stock. But even in 2021, people forget, in 2021, let's just go. When the whole market had such a great year, it had Look at all these corrections it had. Okay, that was when things really started getting bad. But even here, I mean, these were not small corrections. The stock market in 2021 had one pullback of 5%. Everything else was less than that. But look at this, down 11%. That's not horrible, but 11% was 20% back here. This was like 8 to 9%. And so you could, when it got overbought, like it did here, okay, like it did here, and like it is now, you could make money on the bearish side of them. So don't get so caught up in Apple. And believe me, one thing though, the overall market, Apple's not going down to the. I'm sorry. The rest of the market isn't going down until Apple rolls over a little bit. You don't have to see Apple get hit hard, because if the market rolls hard, it'll still be a flight to safety trade. But if Apple keeps rallying, the market's going to hold up as well. But I just think it's getting to a point where it should. Maybe it doesn't start till next week, but it's getting a little dicey there. Oop. No wonder, I had the wrong symbol. Tesla. I typed it in incorrectly, sorry. Okay, so you see, it's not necessarily, but the thing right now is that it's having a problem breaking above that high. You know, we might just talk about higher highs and higher lows. I'm going to get, well, the 200-day moving average isn't as important as some people might think, so I'm going to get rid of it. It's not as oversold as it was. I'm sorry, not as overbought as it was. But see how it's having that tough time breaking out? If it does, well, I'll tell you, and I saw today that there was a decent buyer run of the $1,000 calls. So, you know, if it breaks here, again, higher low, slightly higher high, higher low, nice higher high, higher low, higher high, higher low, bounced off the 100-day moving average. Does it make a higher high? If it does, it's going to 1,000 fast. So, and I wouldn't turn overly bearish unless it broke its 100-day moving average, and that's way down at 829. So I'm a little worried about it because I'm a little worried about the market, but that doesn't mean we can't have one more thrust before we pull back over. And
right. So let me know when you're ready for the tickers there, Matt.
Yeah. But see how this thing, if it makes a higher high right above those highs, and I'll tell you where it is. Bang. Basically $940. It gets above 940. You know, it can be not 940 and 20 cents. It gets, you know, 942, 943. You know, that's going to run to 1,000 real fast. You don't be afraid to jump on that bandwagon if and when it happens. So yeah, any other names? Just fire away. I'd love to see them, and then we'll wrap things up.
Right. No, absolutely. And all right. So let's see. We have Derek, and what's going on, Derek? How we doing, man? Derek with FCX.
Okay.
And for those that just joined, because we had a couple of people here that recently joined, basically Matt was just showing, going over a whole bunch of trade ideas, education, market analysis. And if you are joining till now, if you still want to get into the chat room, you can do it. It's going to expire at midnight. So don't worry, you can still get in. We still have laptops.
Okay, now Freeport McMoran. Now it's Freeport McMoran and gold. At least that's what it used to be. I don't think it's called that anymore. But it is a gold-related stock. Although copper, it's, you know, Freeport McMoran, copper and gold is so. But I'm kind of bullish on gold, so that's why I mentioned it. No, it's just Freeport McMoran Inc. But it used to be called Freeport McMoran Copper and Gold. But you know, because I'm getting more bull again. Like I said, I showed you that chart on commodities and how that except for oil, a lot of these commodities are bouncing back nicely. And this is, you know, this is one of these commodity related stocks. Okay, now you look at here, it's not over, it's bounced back, but it's certainly not overbought on its RSI chart. That's good. Let's get rid of these moving averages because it's big a deal. So what I'm looking to see, you know, so we had a higher low, higher, say higher low, higher high, higher low, higher high. We want another one. But what we're really hoping to see too is to see a nice break, bang. See, it's getting really close to that trend line. If we can get above that, which right now is at about 33 bucks, that's going to be bullish. You know, that would give us another higher high and take it above that trend line. That's going to be very bullish. Now, again, copper, let's go into copper. Oops. Copper, HG1, RGP. See, everybody's talking about, remember how everybody was talking about how copper was getting killable? Yeah, it was. Well, now it's bouncing back. Okay. So, you know, we'd like to see it move higher, but this is in much better shape than a lot of people think it is. Everybody thinks, oh, copper is flat on its back. It's been falling. Well, they don't talk about it. It's up, it's up 14%, almost 14%. They don't talk about it on the financial networks because that's negative, and they don't, they're a lot of the point. I'm not talking to people on those networks, but the people they come on that from a lot of these brokerage houses are paid to be bullish. That's their job, and so they don't mention copper anymore. Funny how that happens. So that's very bullish. And gold. Let's see if I can pull up really quickly. Let's see if I can. No, I'm just going to take too long. So I'll just do this. Commodity. Oops. But I like this little pullback here. That's, getting, if it can break above 1800, it's going to get above, it's already above its trend line. I won't drop it. You can see how that trend line will go down here. It's above that. And we like that it's, commodity. Okay, the gold commodity. See how this, it looks like it's rolling over. That could be a concern. However, that's okay because we've had a couple of, look how its weekly RSI chart is turning up. And if that breaks to the upside, see, that's going to be a nice thing. So I'm not jumping in a big way yet, but I do like gold. And I bought Barrick, one of my, Barrick Gold, which is GOLD. That's the symbol for Barrick Gold. That's one that I think has a lot of potential here. But gold is one where I think can finally break to the upside because people are, because I do believe that inflation is going to its head's going to, its ugly head, it's going to rear its ugly head, and again, not get back to the same level, but it's going to, people will realize it's still a problem. And I say, what the hell am I going to buy now? And I think I'm going to buy gold. So I like FCX and Barrick Gold for that reason.
Right. And for those that are looking at the tickers here and everything, if there is a trade to be made, Matt will be posting it in the live trading room. I'll be showing that to you guys later. But Matt, I want to thank you, man, here for your time. I know you're very gracious here with that, helping the retail community. Is there anything in particular? Well, before you do anything, any closing remarks here? Not just on the markets, but why the folks should join the chat room. I know you have a lot going on this week in the chat.
Yeah, it's just there's so much going on right now, and it's going to be even more going on after we get past Labor Day, and always in an election year, even though it's a midterm election year, it's always gets all sorts of things going on, and this year probably more than any other. And so but again, we go back to what I started off with, is that we have the tools to take advantage of this in both directions, and in the past you could only get long, and it costs you a lot of money to go out 3 months. For these quarterly options. Now you can go weekly options. You can have couples a few days. We have ETFs, inverse ETFs, leveraged ETFs, all sorts of things we can use. But and we have a great group of people in this chat room. We don't have 10,000 people, so you have some hedge fund guy sneaking in there trying to pump up a stock so he can sell it back to you at a higher price. It's people who are helping each other, whether it be educational wise or giving ideas. I didn't mention earlier, which I should have. There's been several ideas where people, one on Amazon that I did not. They asked me, "What do you think of this?" And I said, "Yeah, that's a great trade, but I'm not going to jump in on it." What an idiot! It went up 2,500%. They killed it. It was great. So it's a great community, small community. We really I think work well together, and it's just, we're in this such incredible time in the marketplace. Whenever the Fed is changing policies, and they changed at the beginning of this year, I don't think they're going to change back anywhere near as people think. Whenever they're tightening, even if they change back, it's a situation that creates all sorts of volatility, all sorts of uncertainty. That's what you love. That's what options traders love to do. That's what long-term traders like to do, because you get these opportunities to buy stocks at levels that you don't usually get. That's when I was saying earlier, it's like, well, do you want to buy a Johnson & Johnson who's kind of beaten down? That's a great one. Well, the only time that really good stocks get beaten down is in bear markets. That's what we're in the middle of right now. I think we'll see more of one. It's going to present unbelievable opportunities for people who have a little cash on the sideline, people who've been able to profit during this bear market, instead of those who are so afraid from the volatility that they end up sitting in their hands and they miss an opportunity that only happens 2 or 3 times in a lifetime. So thanks a lot for joining, and I hope you'll stay on. Rodrigo will show you how the chat room works. And for those who joined, thank you. And for those who are thinking about it, I hope you'll think about it. You get a 1 week money back guarantee. I don't churn any accounts. I mean, I didn't do much trading today, and because I didn't see the trades. Some people did. I don't make any money if you do a lot of trades. I make money if you make money. So that's what we're all trying to do here, trying to help people. And thanks a lot for joining. I'll give it to you, Rodrigo. Thanks a lot, buddy. And we'll see everybody on the chat soon. And good luck with everything.
This is the trade. Yeah, my bad there. I was muted there. But this is the chat room. Let me just go over this really quick, right? You have two channels, right? Inner Circle Chat, that's where everybody's posting in that chat room, including Matt Maley. And, it's a two-way conversation street, and you can talk with the other members as well. The other channel is Matt's important messages. That's where Matt is posting entries and exits, meaning that you're going to get all the information you need there. So if you're trying to trade like Matt, copy and mirror his trades, it's very simple. So if you're a new trader, it cannot get any simpler than this, right? Buying a call, buying a put, it's just literally the same concept, right? When it comes to trading, like you're doing with a stock, you buy a stock, you sell it, you buy a call, and then you sell the call back, right? To close. So everything is here, entries, exits, and he's also going to include if it's a small position, medium position, or if he's increasing the stakes on it, so that you pretty much always have a good, measurement of the, I guess not the commitment of the trade, but like, how deep, how far deep we are in the trade, right? So those are the two channels. If you do want to watch the sessions on Tuesdays, you have access to the recordings. Just have to, let us know. And all of the Tuesday sessions have a bunch of education in them about the Fed, about how to trade those types of things, technicals, fundamentals. It's a full hour. It's a full hour with Matt Maley, Chief Market Strategist. So I think that covers, by the way, everybody that did join, right, the chat room gets a free laptop. So that's, guaranteed, in the bag right there for you guys. There's an extra 2 things that I added. So 2 bonus items, everybody that joined. And what else? We did get something else out. We did give out 10 gift cards for $25 to 10 people, right? So 10 people got a $25 gift card, and the email is being sent out as soon as we finish the session out there. So just make sure that you do keep an eye out. If you did win that, we are throwing a lot of bonus stuff for you guys. So that covers everything. Make sure that if you did join, get in the chat room. We start at 8:30 a.m., 9 a.m. That's when Matt gets in. We do have a packed week, so make sure that you're there early in the morning. Shout out to all you guys here. Matt, Ramteen, Alexander, what's going on, brother? Everybody have a good week. Happy trading week. Let's go. And if you have questions, reach out. The contact's there, folks. Have a great day. Stay safe, and we'll see you in the chat room tomorrow.